Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus yen. A little up and a little down in trading here today in this currency pair. The range is only 58 pips for the day. That's well less than the 117 pips average over the last 22 trading days, which is about a month's time for this currency pair. So there is room to roam, but technically speaking, what we have seen so far is that the price, sort of like Friday, moved above the converged 100 and 200 hour moving averages. Yes, there are two lines there, one green and one blue. The blue line represents the 100 hour moving average. The green line represents the 200 hour moving average. And when the price moves above both those moving averages, you expect further momentum in the direction of the break, but that did not happen. It did not happen here. It did not happen here. It did not happen on Friday here and here as well. So the buyers have their shots over the last two trading days, and each of the time the market's moved above those levels, the price has rotated back to the downside. The problem here is that the moves back to the downside have been fairly modest, to say the least. The low price in trading here today came down to around the 139.07. That was just below or just above the corrective low after Friday's failed break to the upside. So I guess you can count that as a positive. But the price still remains below those key 100 and 200 hour moving averages. And if the price is going to move higher in this currency pair, we need to get above that level at 139.40. Looks like 49, maybe it's 48, 47.9, something like that. Need to get above those two moving averages in order to increase the bullish bias and stay above those moving averages. As mentioned, we've had 4 different shots, and each of those shots have missed. So that's the goal for the buyers. Now on the sell side, the sellers who are comfortably below the 100 and 200 hour moving averages and probably in short-term control need to get above these levels right through here. This was the ceiling here for the dollar versus yen, going back in time to May, and then the ceiling became a floor through here. And sort of through here, these are kind of those failures that we saw over here on the hourly chart against the moving averages. Each of the time the market moved below those levels, little in the way of momentum before rotating to the downside. And trading last week, market came down to those that old swing area and found support between the 138.73 and 138.89 levels. So on the downside, those will be the targets to get to and through if the sellers are to remain in control. If they're able to get below those levels, then we start to look toward the 38.2% retracement of the move down, up from, I should say, from the May low to the May high. That level comes in at 138.08, it looks like. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.